Hello and welcome to the weekly Forex forecast, Bears versus Bulls. My name is Greg McLeod, and it's so good to be with you here on this week beginning July 24th, 2022. Hope you guys had a great weekend and are ready for the upcoming market. Before we get started, I want to go ahead and put the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading, and we will get started momentarily. Okay, fantastic. Okay, so here we are. We're another week. We're halfway through the year. We saw some crazy overnight. We had the Mario Draghi resign, and that really caused some really tumultuous moves in the euro. I want to thank you so much for joining me for the live trade-a-thon that we had, our first one that we've ever had. I traded 2 hours in the London session, 2 hours in New York session, and 2 hours during the Asia session. And we had a big turnout, and those videos will be made available. You'll receive an email for those of you who attended our special event. I want to thank you so much for being there and watching me trade live. Hopefully you got a lot of value out of that. There's also a special offer for you as well to work closer with me coming in the future, right? So when you receive that email, you'll be able to use it to log in to the Elite Traders University portal, and that's where your videos are located. So you'll have to register with your name and email address and some other information, and then you'll have access to those videos. 6 hours of training. And again, there's a very special offer for those people who attended both live, and if you weren't able to attend, that you'd also have access to the recordings. Unfortunately, if you did not attend and did not purchase the ticket, the videos, the 6 hours of training, still a great value at $270 to go ahead and do that. Okay, with that, let's go ahead and get started with our Bulls versus Bears. We're going to start off. Let me go ahead and get us back here, and we're going to again, Bulls versus Bears, and we're going to go to our main screen. Okay, we're going to use my market heat map. My market heat map is an arrangement of currency pairs by percentage change. It tells me what's hopping, what's popping, what's dropping, what's not in the market. Green is very simple. Green is an uptrend, red's a downtrend, gray is sideways. Allows me to save a lot of time because I don't have to look at so many charts. Looking at so many of those funky charts all the time, what happens is you just it becomes overwhelming, the amount of information that you'll have to look at. So I just made this graphical organizer where it makes it a lot easier to see the markets, and you can try it for 30 days for free. And after 30 days, if you love it, it's $19.99 a month. But it's not more than just the 6 powerful heat maps. This is one of the heat maps on the homepage, but it's quite a bit more. In fact, so much more.
$6.6 trillion are made every day on the foreign exchange market. And although you love a piece of the action, a lack of knowledge and experience has you wasting more time than you make. What if trading like a pro and making smart decisions could be easy? No scanning endless charts or analyzing confusing reports. No time-consuming research or unreliable social media hot trading tips. Quit the guessing game, avoid risk, and get the answers you need to make huge profits starting right now. With My Market Heat Map, a trade scanner that provides a complete overview of 28 forex currency pairs, plus gold, silver, oil, commodities, crypto, and other major global market indices. Quickly and efficiently identifying profitable market trends and lucrative trade opportunities has never been easier. Simply buy in green, sell in red, and stay away from gray. Earn more, lose less. For a limited time, get a 7-day trial of My Market Heat Map for only $1 today using the coupon code $HEATMAP. Act now, time is running out. Join now and get over $9,500 in bonuses, including video courses, free forex signals, private coaching, and much more. My Market Heat Map. Transform your trading efforts from amateur to pro.
All right, there you go, guys. So it's a heat map, it's a trader toolbox, and also trader education. There's a great inside in the bonuses, you're gonna see of 81 course videos for the Forex Foundations class. So if you are very new to Forex and you really want to, in fact, you go to the bonuses and you can go into our special free access to our Forex Foundations course, and it's a $15,000 value of the course, different trading modules, and it's just a really wonderful course to go through and to help you in your trading. And again, it's absolutely free when you become a My Market Heat Map subscriber, and tons and tons and tons of data, of good information, of good videos, chart patterns, and Fibonacci and MACD and Forex, different news reports and trend trading and channel trading and Japanese candlesticks. Just a plethora of videos, $15,000 of value, and you get it all for just $19.99 a month. You can't beat that deal with a stick, guys. Okay, let's get into My Market Heat Map. Normally when we have an active market, right now it's it's early Asia. I guess Asia's not even up yet, but we do have some movement in the market, and it's green gray. That means that nothing's really happening, with most banks closed right now. That's probably why most of it's gray, with Aussie CAD up 0.21%. We have the pound CAD 0.27%, dollars, Turkish lira up 0.27%. So we're not going to focus on that, but what I do, there's a trader toolbox here. I want to check the economic calendar. When we check the economic calendar, what it does is allows us to know where the big boys are actually going to be thinking of trading, because they trade the news and they start moving the currencies into those, moving those currency pairs that have news associated with them. So we're going to take a look at what's going on for this Monday, July 25th. And we have the Bank of Japan Monetary Policy Meeting Minutes, and that's a high impact item. And that's going to be at 7, almost 8 o'clock Eastern time. Times are in Eastern time. And so the Japanese yen pairs will probably be in play there. Okay. We also have at 8 o'clock, we have the EU Leaders Summit, a medium impact item, and that is for the Eurozone. Now, what I usually do is I go in here and I change the impact from high to from medium to high. I'm sorry, and that kind of really streamlines and trims down the amount of things that we're going to be looking at. And so we can see that on Tuesday, July 26th, we have an Australia economic announcement, CPI. CPI stands for Consumer Price Index. Q on Q is quarter on quarter. So we're going to compare one quarter to another quarter. This high impact item is going to impact the Australian dollar and also all the pairs that have the Australian dollar in them, like Aussie yen or Aussie CAD. So, but the Aussie dollar is what we'll probably be looking at, one of the major currency pairs. Previous number was 1.4%. No forecast is given. And I'm not really paying attention a lot about those numbers. But I said, well, Greg, what about these numbers here? It's kind of confusing. What do they all mean? And I'm not going to really get caught up in what those numbers are, but I just wanted to focus on the flag. Okay, keep it really simple. That this pair is going to be in play. We'll probably see it at either the top of the heat map or the bottom of the heat map, especially as big institutions and hedge funds and large central banks start moving Australian dollar ahead of this number. And so we have, in the Elite Traders University, we have the predictive indicators which we can use to actually track this and to see what's going to happen with the Australian dollar during this time. Going to be about 9:30 p.m. Eastern time on Tuesday, July 26th. So Australian dollar will be in play. Look for it to be in play. Look at for Wednesday, July 27th, 2022. We have lots of U.S. dollar, a plethora of data. This is going to be huge, guys. We have durable goods orders out at 8:30. There's an 8:30 a.m. news cycle and a 10 o'clock a.m. news cycle. But because this is Fed Day, this is where they're going to announce the monetary policy decision, or they're going to raise interest rates or not. It's widely expected that they're going to raise rates some more, maybe another 75 basis points, and this would take us to 2.5%. And interest rates are one of the major movers in currencies. So when we see a central bank like the FOMC or the Reserve Bank of Australia or the Bank of Canada or the Bank of England when they raise interest rates, they're actually decreasing the monetary supply. They're actually printing less money. That's how they control interest rates. It's supply and demand. The more money they put out, then the cheaper the money is worth, and that's supposed to stimulate the economy. But when they want to put the brakes on the economy to slow it down in order to fight high prices, they reduce the amount of currency in circulation. And it's just simple supply and demand. When you have lower demand and lower supply and more demand, well, that pushes up the value of the currency. So you'll probably see the US dollar start to run up into this Wednesday announcement. Now, I wouldn't be surprised if the dollar sold off dramatically right after this announcement. So this is going to be one of those buy the rumor, sell the news kind of things, where people say, oh, wow, they're going to raise rates. And when they raise they think they're going to they raise rates, but the dollar goes down. It does exactly the opposite of what people actually think. So be careful with trading this announcement. And it's going to be at 2 p.m. Eastern time. It's going to consist of several parts. You have the Fed's monetary policy statement, then the actual interest rate decision, and then they're going to have a press conference where they're going to answer questions by the press and people asking like what's going on with the economy. Do you see them? Are they going to raise more, or maybe they're one and done? Maybe that's it for a while until September or October, and we could say that maybe because the Fed's been thought to be behind the curve. When they say behind the curve, it means that they're late to the party. They didn't raise rates fast enough. That's why everything is so out of whack with high prices, $6 a gallon gasoline and shortage of food and supplies and things like that. So this is the whole idea about the FOMC raising rates, that they're trying to control inflation. That Rory, I went to get some gas yesterday. I think it was $3.39 a gallon. So it's a lot better than $4.50 not too long ago. So apparently, these higher interest rates are dampening demand, which is lowering prices. And so if they think their policies are working, then we could see the dollar actually fall. Okay, which is going to be counterintuitive. Okay, so after that, we on Thursday the 28th we have GDP annualized, or gross domestic product, which is GDP, at 8:30 a.m. Eastern time. It's a high impact item. The previous number was negative 1.6%, and we look for an increase to 1%. So I would say you're probably going to be easy to beat that. Now, normally, you probably say, oh, this might be a good number, so the dollar will go up. Probably not the case. Usually when there's good economic data, the US dollar actually goes down. Okay, it's one of the few currencies like that, because the US dollar is the reserve currency of the world. People they run for safety in the US dollar. When everything is relatively safe and running very well, people actually sell the dollar and put their money to work in other high-yielding currencies and high-yielding assets. So we may see the dollar actually sell off, and we might see other currencies benefit from a positive economic outlook. Friday, July 29th, we have GDP month on month out of Canada, and that's going to be at 8:30 as well. And the Canadian dollar and the Canadian dollar pairs will also benefit from the increased volatility that will probably occur on that currency on Friday. Now, when you see lots of American flags, you might want to gravitate. Most people might say, "Oh, I'll go ahead and trade dollar Swiss or dollar CAD," and those are fine. But a better trade would be the euro. The euro is considered the anti-dollar, and so when you're looking at U.S. news, the euro dollar is my favorite currency to trade. Now, it didn't treat me that well during the live trade-a-thon, but we did eke out a 3.7% profit in 6 hours, which is pretty paltry. But still, some people can't get 3.7% on a good day, and so anyway, I look forward to seeing what the technicals look like. So this concludes our economic calendar part of the show. And so we're going to get into the technicals. I say, Greg, show us the technicals. no more of this stuff here. I said, no worries, no worries. We're gonna get right into the charts, and I've got a chart up here ready to go. And we're actually going to start with the DXY, which is the US dollar index. The US dollar index is a basket of currencies versus the US dollar, and it really gives us an idea. When we know where the US dollar is going, well, guess what? The 7 major currency pairs have the dollar in them. So we know what direction those are going to go based on where the dollar is going. And as we can see from this chart, on the daily chart, we see higher highs and higher lows bouncing off of a 50-period moving average on a daily chart. You can see we've been in a very strong uptrend. And right now, we've got a little bit of pullback to a level of support, right? And we have an indecision candle, a doji, right at this area. So we connected these 2 swing points here. And then we have this third test, which is the bounce from the trend line. And it wasn't a very strong bounce. It tested this trend line created by 2 points. This old geometry 101, 2 points create a line. You probably were asleep during that lesson in geometry, or maybe you just don't remember. But in any event, 2 points create a line. So these are 2 points created by this is a line created by these 2 points. And right here is our first test of the line created by those 2 points. This is our very first test. Okay, so it'll be very interesting to see if we get some type of a bounce from that and then a move higher. Okay, again, this is the first test of this trend line. So we look for some type of a bounce. So we might see like pullbacks in the euro, pullbacks in the pound versus US dollar, euro versus US dollar, Aussie versus US dollar. So bulls versus bears, I am constructively bullish, probably until the FOMC meeting on Wednesday. Okay, so I would go ahead and put my bull on here, right? My bull's not showing. All right. And just bring it to the top, right? Bulls versus bears. I am bullish the US dollar. Okay. Let's make our bull go away. Goodbye, Mr. Bull. Okay. So let's go ahead and move on to the. Do you like my Mr. Rogers kind of vibe here? It's a wonderful day in the market. A wonderful day to make some pips. Would you be mine? All right. So here's the euro versus the USD. This is again a daily chart. Structurally, lower swing highs and lower swing lows. We're in a downtrend, but we had a little bit of a rally of 1, 2, 3, 4, 5 days, and then a kind of indecision day there, and we have like a hanging man and a nascent little uptrend here, right? Which it's a retrace. It's not a full-blown uptrend. It's a retrace against, and we've seen many of these these moves, these retraces against the trend, getting the bulls excited, and then boom, they're disappointed. I'm gonna have another one, and they get disappointed, and we have one more, and I'm looking bulls versus bears. I'm bearish on the euro, and maybe we come back and tag the old 100 area one last time, maybe a higher low, or maybe even lower, the same low we might retag. But I am very bearish the euro. Now, FOMC, we may see a turnaround, and again, we would like to see the bulls case is if we get above 102.75, and if we were to break that, then we would see the possibility of a much bigger move back up to the 105 area. I think first things first down, then up in bulls versus bears. I am bearish, right? We are okay. Trying to show my my to the top. Okay. I know. How about, yeah, probably need to show it, right? Our bear and then our bull. Yeah. So, we're not bullish. We are bearish though. And somehow, some reason, our bear is hiding. There we go. Roar. Okay. He's there. So we're bearish on the euro. Yeah. Chances are we're probably bearish on some other things too. Let's go to the pound. Let's go across the channel and go to the pound GBPUSD. Right. And we have some lower swing highs, lower swing lows. And similarly kind of a bounce, but not so much. Up to some resistance at 120.37. Didn't quite get there. Got some spiky candles. I mean, they've pushed by, you can see the wicks where the bulls have tried to push into this and above this 1200 whole number round number. It's holding. This banker's resistance is holding very solidly as they try to push it through and have been unable to sustain their close above this area. So eventually they'll get tired of pushing, and then they'll take it to a place where there's the least amount of resistance, and so maybe look for a move back down. Maybe maybe at halfway that at least maybe 118.90 or so, right? So I would look for a move back down. So bulls versus bears. I am bearish the British pound versus US dollar, known as cable. Okay. Let's move on to the Australian dollar, right? AUDUSD. Remember that's in play for Monday. And you can see this one is very constructive. We had a nice uptrend from July 14th all the way up to the 22nd. So an 8-day rally. 8-day rally found resistance at the 50-period moving average, the 50-day moving average. And so this could, if we see a break maybe below the 0.6900 area, I'm bearish this, because we've seen these rallies, these bear market rallies, where we have a rally up against the moving average and it drops, and it rallies and it drops. So this could be a great setup for for some type of a break to the south side, and we can get some pretty good pips down. So bulls versus bears, I am bearish this pair, especially on a break below the whole number round number of 0.6900. We could see maybe a fast move down to the whole number round number at the 6,800 mark. We could see that is something. Even as low as the old low, we can get some vicious sell-off just before the FOMC as the dollar continues to rally higher. Okay. So bulls versus bears. I'm bearish on this Aussie dollar. Okay. Let's look at the Kiwi. It's been it's already up to its 50-day moving average, and it's looking like it's already given up the ghost already with a indecision doji spinning top, like a cross, making a decision at the cross. Either it's going to go to heaven or it's going to go to hell. And it's probably going to go to hell in the handbasket, right? So we can connect these swing points, these wicks, and we have support at 62.11. Maybe we get a break, forming some type of an evening star pattern, and that would probably trigger a bigger decline down to the 61.50 area, where there was there was some support, lots of like 4 days of support in there. So we can even look for half this move, whatever this move was from here to here, and take about half of it down. Will be a good target, goodly gain down to the 61.23 area. So bulls versus bears, I am bearish the Kiwi dollar, right? Temporarily up until Wednesday. I know we might even see a move higher that would, I based on what's going on, this downtrend and the Fed getting ready to raise 75 basis points, it'd be very difficult for any of these currencies to battle against a 75 basis point rate hike. But how long that the effects of that will last, it may not last very long. So the initial knee-jerk reaction will be down, but look for some type of reversal back higher. And I would look at getting long, if we saw some type of a break above the high, 6304, and we can see a big move to retrace many of this drop, maybe up to the 6500 area. But I'm still short term. I am bearish short term. Long term bullish actually. Okay, let's look at the dollar as the base pair in the driver's seat. Let's look at the Japanese yen, which is always a different one. It's a different animal, but you can see that she's getting ready to. Looks like she wants to roll over. She's ahead of time. Big sell off after hitting up near close to the 140 handle. Actually, 139.33 came short of that. But we get these big drop offs, maybe down to support, and then we bounce higher. This has been a long and fast uptrend. Just accelerate, move sideways from December through maybe like March, and then from March it's just marched higher highs, higher lows, right? Then we have this pullback, and the pullback to probably an existing. Here's our trend line there, and we can draw one across here. We actually, when we broke a trend line, and we don't have any candles on the other side, so we can't really. We connect these. Sometimes what we have is when price breaks, it comes back to retest the trend line. This was a big sell-off, so we may get some type of what we call a dead cat bounce. And PETA, don't come at me for talking about dead cats. It is a Wall Street term, also not a very nice one. But the whole theory is if you were to throw a cat on the ground, that it would bounce. If it was dead, if it was alive, it probably landed on its feet, right? I am constructively, especially on a big pullback like this. We've seen big pullbacks where, I am cautiously bullish. I would take like maybe a small position, maybe look to be bullish. It's an uptrend. It's hard to fight the uptrend, right? Don't fight the tape. Don't fight the Fed. They say don't fight the Fed. When they say don't fight the Fed, it really means that when Fed starts raising rates, you don't go the opposite direction. And why would you be long a country's currency that has negative interest rates versus one that's actually increasing their interest rates? Okay, so that is the don't fight the Fed. Oh, okay, put that back. Oh, bulls versus bears, neon. Let's go ahead. Goodbye, Mr. Neon Bull. Let's go ahead and look at the dollar Swiss, USDCHF. And we can see that we have actually removed drawings. Okay, it's been a sing-song kind of. You would think with the dollar in the driver's seat that we would see some really strong new highs, and this is why I kind of stick away from dollar Swiss, because it doesn't really play ball with everybody else, right? It kind of does its own thing, and we can see that we're getting lower highs, lower lows, and it's a real mixed bag. I would be cautiously bearish on dollar Swiss. Maybe as we break this low, we can probably retest the low 94.91. So I would be slightly bearish on that. Even though it doesn't really fit the theme of dollar strength. It seems like it's getting started on dollar weakness early. Okay, so this could be forecasting a much bigger drop back down to where it broke out from, because we have this lower highs and lower lows, and so that may be so. Bulls versus bears. I'm cautiously bearish on the dollar Swiss. Okay, let's go ahead and keep going. We are just moving through. With dollar CAD. Dollar CAD is interesting because Canada is one of the largest suppliers of oil to the United States. And so you have this oil dynamic versus the US dollar. And so we've been kind of chopping around. We haven't seen like, oh, the US dollar is totally kick butt against the Canadian dollar. Kick butt's a technical term. But we can see that we've been moving in these sideways, just sideways movement, right? And I'm actually going to step out on a limb here and actually, we're sitting on support. We're in a range, and we're at the top of the range. And we put a high in there and the bottom of the range. We're just stuck in the middle of the range. We're just in this loose range. I mean, the absolute low is maybe there, but we're still in this range. And so maybe short term up, but maybe medium term bearish. So, I am cautiously bullish short term, but I'm also bearish long term. Okay, we can probably return back to the 123 area after a brief rally, maybe up until Wednesday. We get some type of a rally on the news, and then back a drop down to this low. Right, look for a break of the trend line, break of the 50 period EMA. Okay, so that is that. So again, short term bullish, longer term bearish on dollar CAD. Okay. So that did it for our major currency pairs. If we just almost going to throw a yen pair that's not Japanese yen, because again, the dollar yen it wants to do its own thing. I'm going to do a pound yen. Pound yen looks fairly choppy, right? And we can see maybe a retest of some lows, but there were some wicks down there. Support like 160.32. But we're in a triangle. This is a big question mark here. We have higher highs or higher lows, I'm sorry, and then we have lower highs at the same time. So this could really, as we get toward the end of this triangle, we could see some type of resolution breakout. And maybe the rate announcement will be the catalyst, which takes us out of this really long consolidation. We've been in this consolidation since, April to now. So it's like 3 months of consolidation. We probably see some type of a breakout above 165 or 166 would be very interesting. We would have a huge move up to the 170s if we can break out of that. Okay. And that'll be a risk-on rally. Be very, very cool indeed. Okay, let's get into some of the indices. Let's go to the S&P 500. I'm going to use the SPX 500. This is CFD. And we'll just use this one. Okay. And we can see that we had, we've been going in a bear trend since January 2022. Just ripping all the gains, billions of dollars, trillions of dollars ripped off market cap. And now we got down to about 36.34, and now we're making some higher lows, a double bottom here in the 37.24.27 area, a breakout above the 50-day moving average. This is very, very hopeful for the bulls. The whole goal is will they stay above this moving average here, or we might get some type of a pullback. And I'm thinking that with this kind of inside day kind of pattern where we have a candle inside of a green candle, a red candle, a bearish candle inside of a green candle, usually is a pretty bearish for a continuation pattern to the south side. So I'm looking for some type of a pullback. So if you can put maybe a Fibonacci, employ Fibonacci's there. And the Fibonacci's are a series of support lines or resistance lines based on how far one currency or one instrument has gone in distance. So there's a 50% because it's halfway. And so we might even see a move down to the 50% retracement, 38.80, before we get our bounce higher. The higher interest rates are usually bad for the stock market. The bond market and stock market usually goes in the opposite direction. And so we might see an initial move down on Monday, down lower, but it will provide us a nice buying opportunity for a launch higher. Okay, so short term, bulls versus bears in the S&P 500. I am short term bearish, but I am longer term bullish. Okay, We just got some good things in looking the structure. Got like lots of long wicks and buyers stepping in every time we get a dip. This is like a double bottom, and so we could see some pretty good movement. I think we go down first, and so keep your powder dry. Monday usually is manic Monday, panic Monday, and turnaround Tuesday. So, but since FOMC is Wednesday, it might get put off to like turnaround Thursday, right? Okay. Let's take a look at the next thing I want to look at is the US, maybe the US 30, Dow 30. Let's take a look at that. US 30. Hopefully, I hope you're learning something here. It's helpful. It's similar type of pattern here. Again, I would look for some type of a pullback as well. I'll take a fib on from the low to the high of that wick. The low that we had, that low was put in on July 14th, 2022, and we had our high on the 22nd, which is an 8-day move to the upside with some pauses in between. I look for some type of a pullback, some type of profit taking, maybe back down to the 31,197 area. Again, I'm looking for that decline to last until Wednesday, and probably Thursday or late Wednesday, we could see a dramatic move to the upside, and that would give us a very powerful move, right? If the Fed surprises and talks very bearishly, then we could see a move lower, maybe even down to the lows of 29.76, and that would be a double bottom as well, and that we would retest this low. We retest some of the pandemic lows, right? I think was that our pandemic low. Yeah, March. Yeah, 2020 was the March low was much lower. I'm sorry, it was down there, right? So if we actually take the Fibonacci from the March low and go to the recent highs that we had, we are very close. In fact, that came to the 38% retracement of that move, and we bounced strongly off of that. Now we could touch it, and we could even go lower. We might even, we could go lower to the 50% retracement as well. So we're not out of the woods yet. It looks. I'm basically looking at short-term bearish. And we could go lower. There were a lot of little steps here. In fact, there's a big air gap right there that takes us all the way down to 26,060. Okay, so I'll just be careful. The darkness should end soon, but the Fed, as long as the Fed keeps tightening, don't expect too much of a rally. Okay. So let's go ahead and move on to NQ. It's gonna be similar, same, NQ. Yeah. And we can see big rally, huge rally, right? But we got an inside day kind of pattern there where we have, it's like a bearish candle with inside the body of a green candle, and usually that's bearish. So we look for maybe some type of pullback, maybe back down to the moving average. We're at 12,423, maybe get down to 12,038 or so to the downside, right? And we could see some, we could look for some retest. Now, it could get pretty nasty too, just like the US 30. You can come down and retest the 11,000 area. When we have this kind of ABC and we start a new three-wave leg down, it could be very, very nasty for the NASDAQ bulls. A retest of this area, if it holds, be nice for a bounce higher, especially if the Fed is, believes that they're not going to need any more interest rate hikes until October or so. Then that would be very nice for the market. Okay, but if the market gets ahead of itself, then the Fed might just spoil the party and make things a lot worse for equity traders. Okay, so with that, let's go ahead and look at, we have gold, silver, and oil, and then we'll wrap things up. And Bitcoin. Don't forget Bitcoin, right? So let's go ahead and look at our gold, XAUUSD. Take a quick gander at that. And we can see big move down, south side break. Just remove all drawings, and we just dropped and dropped. We're at 1680. Remember how the mighty have fallen? Well, gold is a hedge against inflation. Well, that hedge sure got crushed right here. 2071 was a high back in March, and we haven't touched that. We came all the way down to 1680. Lost almost like $400 in value. Retesting an old low, though, from August 9th, 2021, which is pretty interesting. It has been tested numerous times back in March 2021, March 5th, 2021, again, March 31st, 2021, and again, August 9th, 2021. And now, almost a year later, we are at the same level. And every time we've touched that level, we've gone up significantly. So given this is a very strong level of support, we expect probably the same type of bounce. So bulls versus bears on gold, maybe move back up to 1806. I am bullish the gold. Okay, bullish gold. Gold bug. Yeah. Okay, and let's look at silver, XAGUSD. See if we have any similar patterns and remove all drawings. Okay, and we have dropped significantly. We were highs in the $30 range, and now we are in the $18 range. So, but let's see, we're probably seeing some type of significant support, the Fibonacci support area. We go from bottom to the top wick. And yes, we are. We're sitting at the 61.8% Fibonacci retracement. Again, it's a level that has been tested for several days. We can see each candle is 1 day. So 1 day, 2 day, 3 day, 4 day, 5 day, 6 days, 7 days. And narrow range, maybe narrow range 8. Our 8th bar may bounce us up and take us out toward this $20 mark. So bulls versus bears. I am bullish on silver. As long as we can stay above the hold at the $18 area. Okay. And let's take a look at oil. Let's see, U.S. oil might be good looking. And we can see, wow, didn't quite make it to the old high, 29.32. 23.78 was a lower high. We're sitting on support though, so it's pretty interesting. We're sitting on this support in this area, this zone, this $95 a barrel area, and it's holding pretty tight. And we pierced it, and buyers stepped in. So it'll be very interesting if we can see a move above $100 a barrel, which will probably take us back up to 129, right? Especially if the dollar does start weakening eventually, then we would see this could play out. So bulls versus bears on oil. I am cautiously bullish on oil. We're at key levels of support that's held for several months. If we do break that level, though, we do have quite a way to fall down. Okay. But looks like it's being bid up pretty well there. Okay. Last but not least, Bitcoin, BTC USD. And the key word is USD. It's BTC, but it's versus USD. That's how we look at it. Because people trade their dollars for Bitcoin, right? And if the Fed is hiking rates and you get interest for holding the dollar, Bitcoin's not paying any interest, right? Just like gold doesn't pay any interest. So objects that don't pay interest usually depreciate against the dollar, except for oil. Okay, let's take a look. And we can see that we were looking for some down movement. We got it. And we're sitting up high here against the 50-day moving average. We get a high of 24,257. We hit that high on July 20th, 2022. And we're bouncing off this area. Downtrend, lower swing highs and lower swing lows. Every time the Bitcoin seems to want to drive higher. It never lasts very long, and then it collapses spectacularly. And so this may be no different with, again, we have the economic picture with the Fed in full hike mode, and Bitcoin doesn't pay any interest, so we would expect this area to break and for prices to keep going down. Maybe come back down to the 17,623 area. But, bulls versus bears for Bitcoin, I am a bear. I am not a hodler, so I am bearish. Okay. Well, guys, I want to thank you so much for joining me for Bulls versus Bears, our weekly Forex forecast. And let me turn my bear off. Yeah, so I'm so happy that you were able to join me and spend some time with me. I hope I've answered your questions regarding the markets and you have a clearer picture of how to trade moving forward for this week. If you have any questions, make sure you like and subscribe to this video and this channel, and show your support with a comment or so, and share it with a friend if you know someone that would benefit from my analysis. And also remember that Elite Traders University is taking applications. Stay tuned to find out more. This is Dr. Greg McLeod talking to you live from Texas. We'll see you later. Peace and pips. Cheers.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!